Hello everyone. This session is in this session we will be discussing SS 710, which is on comparative information. And as part of this, there are two frameworks, which is corresponding figures and comparative financial statements, which are covered by the standard, and we'll be discussing these two. In terms of the scope, SS 710 deals with the auditor's responsibilities regarding comparative information in an audit of financial statements, including those situations where the financial statements of the prior period have been audited by a predecessor auditor or they were not audited at all. Now, if you have a situation wherein the prior period financial statements were audited by another auditor, do you just apply 710? The answer is that you, in addition to 710, the SF 510, which deals with opening balances, will also have to be applied. Like I mentioned earlier, comparative information, when we talk about that, it refers to, when we will discuss it in the slide, it depends upon the framework, the reporting framework that is being followed. So there are two reporting frameworks. One is called corresponding figures and the other is called comparative financial statements. Which approach is or which framework is followed usually depends upon the laws and regulations, and it may also be specified as per the terms of the engagement. So let's just first understand what these two frameworks are all about. If you look at corresponding figures, which is actually generally the framework we follow in India, the auditor's opinion on financial statements refers to only the current year. So, for example, if I'm issuing an audit report on year ended March 19, 31st March 19, in the audit report, I will refer to true and fair view on, position in the balance sheet as at 31st March 19. I will not refer to March 18 separately. However, if you look at the comparative financial statement framework, in that context, the auditor's opinion refers to each period for which the financial statements are presented. So in the example I took, in the financial statements, I would have current year numbers, which are from 31st March 19. My comparative numbers or prior period numbers will be for 31st March 18. And in the comparative financial statement framework, my audit opinion will explicitly refer to 31st March 19 as well as 31st March 2018. So SA 710 covers the reporting requirements for both of these frameworks. Apart from the period on which we are reporting, there are some other significant differences between the two frameworks. So if you look at the corresponding figures, in corresponding figure framework, the information, which is the amounts and other disclosures for prior period, which are included in the financial statements, they are considered as integral part of the current period financial statement. They are intended to be read in relation to amounts and disclosures of the current period. And therefore, the level of details which is presented in the corresponding amounts and disclosures is dictated primarily by relevance of those to the current period figures. On the contrary, if you look at the comparative financial statements, the information in this case, the comparative information and disclosures are included for comparison with the financial statements of the current period. And where audited, they are referred to in the auditor's opinion. The level of information which is included in the comparative financial statement framework is comparable to that of the financial statement of the current period. So, like I mentioned, in India, the framework which is typically followed is the corresponding figure framework, and therefore, most of our discussion in this session today will focus on the corresponding figures. Now, I mentioned that in the corresponding figure framework, my opinion only refers to the current year. In the example I took, 31st March 2019. I do not specifically refer to anything for the prior period. But are there any circumstances which may need me to refer to the comparatives specifically? As per the standard, there can be two scenarios in which the auditor may need to make a specific reference to corresponding figure. Scenario one is that you had the opinion on the prior period was modified. Modified being either qualified, adverse, or disclaimer. So if you had a situation wherein, let's say for 31st March 2018, the audit opinion was modified, how would you deal with it when you're issuing the current period report, which is your report on 31st March 19? Depending upon whether that modification is resolved or unresolved, there may be a need to refer to the corresponding figures, and we'll discuss that through examples in the subsequent slide. The second situation wherein you may need to refer to corresponding figure is where the auditor's report in the prior period was actually unmodified. It was a clean report, but while you're performing the current period audit, you become aware of a material misstatement which affects the prior period financial statement. So through examples, we will try and understand the reporting in both these scenarios. So let me go to scenario 1, where the prior period report was modified, and we will see how to deal with those. So let's say the prior period modification is still unresolved. Okay, so if it is still unresolved, I would evaluate further whether that modification also affects my current period figures or not. If it does not, if it results in a modification even for my current period figure, logically my audit report will have a modification for prior period as well as for the current period figure. Let's go to a second situation wherein your prior period modification is unresolved, but it does not affect your current period figures. In that case, the modification in the current year will be limited only to the corresponding figure, which means my audit report for the current period numbers will not be modified, but I will modify my report to the extent it relates to corresponding figures. The last situation is the prior period qualification or adverse or modification effectively has been appropriately resolved. It's been properly dealt with, correction made, appropriate disclosures made. In that context, typically the auditor will not refer to the previous modification because it's been appropriately addressed with relevant disclosure. However, depending upon the matter, the auditor may include an emphasis of matter paragraph in the audit report. So let's understand this through examples. Like I said, this is the first example wherein the company did not comply with Ind AS 16 in the previous year. Effectively, it did not provide for any depreciation on its depreciable assets. So the previous year, let's say 31st March 2018, the report was suitably modified by the auditor. Now, when I look at, if I'm the auditor, continuing auditor, when I look at my current year, if the company has still not corrected its accounting policy and the company is still not providing the depreciation, then my audit report will have to be modified for 31st March 19 as well as 31st March 18. Okay, so as you can see, the first box says I will issue a modified report for current year figures as well as previous year figures. What would happen going forward? Going forward, if the company still does not rectify the accounting policy, a similar position will play out, which means you will continue to modify your audit report for the current period as well as previous year figures. Let's see this. In this case, we have a situation wherein my report was in the previous year was modified, but the issue which gave rise to the modification has been largely dealt with. So in this case, in year ended 31st March 2018, the company was not able to obtain external confirmations for certain accounts receivables, and therefore, in the absence of those, there was no sufficient appropriate evidence available as far as the provisioning of these accounts receivable was concerned. The audit report was suitably modified. When you come to 31st March 2019, the company has been able to obtain the requisite external confirmations and the relevant provisioning has also been made, and the auditor is also comfortable with the numbers of accounts receivable which are being carried forward. Now, if you look at it effectively, the modification of the previous year has been resolved, but it doesn't get resolved as far as the split between the current year and the previous year is concerned. So what I'm trying to say is that while requisite provisions have been made for the accounts receivable, uh, in the absence of confirmations for the previous year, the auditor is unable to ascertain how much of this provision relates to current year and how much of this should have been recognized in previous year itself. So while at a balance sheet date of 31st March 19, the accounts receivable number is considered to be appropriate, the the allocation of the provision to current year and previous year is still not that still cannot be confirmed, and therefore, as far as the current year report is concerned, uh, my opinion for current year figures will be clean, but I will still modify my opinion as far as the comparative information, that is the corresponding figures for the previous year, are concerned. So my report, and the standard has illustrative audit reports for these situations, wherein in my basis of modified opinion, I will explicitly state that the report or opinion is modified only with respect to the corresponding figures. Going forward, there would be actually no impact as far as this situation is concerned, because the accounting or because the transaction has been appropriately accounted for, and when you look at, say, 31st March 2020, your current period numbers for March 20 as well as for March 90 will be appropriate. Now let's move to the second scenario that I mentioned, wherein the audit report for the prior period was unmodified, but while auditing the current year, while performing the audit for the current year, you become aware of a material misstatement. In that context, you will first see whether the misstatement has now been dealt with. So if a prior period error is identified, you will see whether the management has corrected it as per the applicable financial reporting framework. So for example, for companies in Ind AS, it would mean that your prior period numbers are restated. For companies under the AS, it would mean that your prior period disclosures, the prior period impact is recognized in the current year with appropriate disclosures. Now, if it has been dealt with appropriately, then the auditor may just include an emphasis of matter paragraph depending upon the gravity of the misstatement. However, if the misstatement has not been dealt with as required under the applicable reporting framework, then you would need to issue a modified report regarding the corresponding figure. Now, this is assuming that there is no impact as far as the current year is concerned, the impact related only to previous year. So yeah. Let's move on to some of the special considerations in this standard. If you've got a situation wherein your prior period financial statements were audited by another auditor, uh, should I refer to the fact that I was not the predecessor auditor? So the standard clarifies that if the laws and regulations permit reference to predecessor auditor's report on corresponding figures, you can refer to the fact that the financial statements of the prior period were audited by another auditor. This disclosure or this reference, this fact is disclosed as part of the other matter paragraph. While stating the fact that the financial statements were audited by another auditor, you should also mention the type of opinion which was expressed by the predecessor auditor and the date of the audit report. Let's see what would I do if the prior period financial statements are unaudited. If the prior period financial statements are unaudited, it does not, like I mentioned earlier, take away my responsibility of auditing the opening balances. So while as far as my reporting is concerned, I will include another matter paragraph which will specify that which will state that the corresponding figures are unaudited. But I will also have to perform procedures as per SA 510 on the opening balances. The standard also requires that in such cases, the auditor should request the management that this fact is also disclosed on the face of the current period financial statements with respect to corresponding figures. Um, yeah. if the auditor is unable to, when you apply SF 510, if the auditor is unable to obtain sufficient appropriate audit evidence regarding the opening balances, the report would have to be appropriately modified as per SA 705. You may also have situations wherein you manage to get the evidence on opening balances, but you encountered significant difficulty as far as obtaining sufficient appropriate evidence was concerned. In such a case, the auditor may consider this to be a key audit matter under SA 701. And there can be other situations wherein this may result in a key audit matter. So, for example, it may involve difficult, complex auditor judgments. So, in those cases, the auditor may consider whether a key audit matter is paragraph is required. So, this was as far as the corresponding figures are concerned. I will quickly take you through the comparative financial statements framework. As I mentioned earlier, in this framework, the auditor's opinion refers to each period for which the financial statements are presented and on which an opinion is given. Now, even in the comparative financial statements framework, you can have situations wherein, let's say, your previous year was modified, current year that issue is resolved or unresolved. The approach, as we discussed earlier, will largely continue. But let's just take a situation wherein, let's say, if I was the predecessor auditor, I audited previous year and I'm auditing the current year as well. Last year, I gave a clean opinion, an unmodified opinion. While auditing in the current year, my opinion on the prior period is different. I believe a modified opinion is called for. This would largely be because I've identified some misstatement which the management is not correcting now. In that case, when I change my audit opinion as far as the previous year is concerned, the auditor is required to give substantive reasons for difference in the other matter paragraph. So these are the two frameworks. Like I said earlier, corresponding figures is largely the one which is used in India. And I hope you found this session useful. Thank you so much.